Hello and welcome to another daily market update by Market Intel. My name is Ben and today we want to take a look at an interesting stock which is currently on its way into our trading area, into our support area. The stock is Disney. And we have communicated in previous updates a support area, a trading area, a target area, and the price is currently moving towards it. So I think it's time for an update. The link in the video description, it will take you to our website. Here you can see the website, dailymarketupdate.com. You can see all these asset classes here currently on the screen. For example, the oil market, stock market, cryptocurrencies, gold, NASDAQ, S&P 500. I think it's a no-brainer because these updates are completely free. They are Elliott-Wave updates, daily updates, but every few days you get updates, for example, about Disney and again, other stocks. And then we have cryptocurrencies, which is also very interesting at the moment. So feel free to check it out. I suggest we take a look at the chart now. So today we want to take a look at Disney, and what you get when you register, you get the text update as well as relevant support levels, resistance levels. Let's start with the 2-day chart. We click on it, we can hide the text, and now it's getting interesting because on this chart, first of all, what you can see that as per our preferred scenario, in our primary scenario, you can see that a larger degree wave 2, which is sort of the end of a long correction, that bottomed end of 2023. That's the idea. And the idea is that we're now in a bullish cycle, which is a third wave rally. And quick education lesson, third wave rallies as per Elliott-Wave, in markets, in financial markets, they are typically the rallies that most Elliott-Wave traders want to be in. They are the rallies that are typically the most aggressive ones. And therefore, it's typically interesting to get an entry before such a third wave starts, or if we are in a third wave, in the pullback within this uptrend. So that's what we're going to take a look at now. So the idea is we have started this rally, and the idea is that with a probability of 62%, this is our preferred scenario, and we expect further uptrend trend continuation. The next upside breakout point and resistance is at $126.48. Now you can see this here on the chart. This is the next breakout point. And then above that resistance, which is critical on this time frame, is $203.02. Now, with a probability of 38%, we see a different scenario as alternative, also as plausible. So you need to be aware of that. So in this scenario would be a high B wave. In this scenario, we only completed an A wave, as you can see here in blue, end of last year. This is a B wave rally, and we will come down once more in a C wave, where then below the September low, the market will have another chance to possibly reverse and to turn around. Now but this is only the alternative. Let's take a look at the 2-hour chart. You can see everything with a little bit more detail. Okay, so in this on this time frame, you can see that the green wave 2 finished obviously last year. Okay, September, October last year. Then the market rallied in 5 waves in magenta wave 1, and the previously communicated trading area still active. It's on the chart. It's between $88.36 and $101.24. The market is currently pulling back to that area, as you can see, and in quite an impulsive way. So suggestion is that we bottomed in an A wave, we rallied in a B wave, and this is now the C wave down. And we'd like to get the market or the price to pull back into this area and then ideally reverse before breaking below 88.36. So that's the idea. Is per the primary scenario on this time frame then, which we assign a 68% probability, we want to see a third wave rally to the upside. And that would be the third wave in an even larger third wave, as already presented on the 2-day chart. And the critical breakout point is at $123.74. If the market rallies from here without getting into the trading area, then it is possible and will be expected then that this is an extension in wave 1, in magenta wave 1. So what we want to see is a healthy wave 2. If we rally from here, break out now, then it's expected to start this magenta wave 2 a little bit later. But it would just be a variation of the same scenario. That's quite a bullish structure. I think that means in the very short term that we expect a little bit more downside on the Disney chart, but then essentially a breakout and a really, really strong surge to the upside When do we have to change our opinion to something more bearish? Well, that would be a break below the $88.36 level. That's the 78.6 retracement that you see on the chart. So yeah, that's the update about Disney. Hope you enjoyed the update. If you did, then yeah, feel free to use the link in the description. And then you get to our website. Here you can register for free and you'll receive these daily free Elliott-Wave updates. Thank you very much. Bye-bye.